It is the 1st of July, so as usual on this channel, what we do on the 1st of every month, we look at the charts because it means that the monthly candle has closed, which gives us more insight into what lies ahead for not only for this month, but for the next couple of months. So that is exactly what we're going to do. I have some bad news. It doesn't look good, unfortunately. So let's dive into the charts and let me share with you what I think could lie ahead. By the way, if you are new to the channel, welcome. Click that subscribe button down below. Click the notification bell so you do get updates whenever I upload a new video. If you want me to email you with important updates and video upload notifications, the first link in the description down below, click on that, enter your name and email, and you will receive those emails whenever there's something important in the crypto space and whenever I upload a new video. You can also follow me on Twitter, Instagram, and join our free public Telegram channel. The links are down in the description below. Alright, so let's start out with looking at the Bitcoin historic monthly returns. And as you can see, it's not pretty. June was the worst June since 2013. Actually, since we've been tracking this on the specific table, 37.28% in the negative. It does not look pretty. You can see here, we've had 3 red months in a row. Now, again, that is a really bad June. If you go back, you can see here what has been happening. Also, a thing to keep in mind is that Bitcoin was created in 2009, so it has never seen bad stock market conditions like we saw in 2008, because pretty much after the 2008 crash, the market has kind of been up only. And sure, there have been some corrections in between, but it basically only went up since 2008. So now, in 2022, we are seeing a similar environment to 2008, where the stock markets and the macro has dropped significantly. So this is the first time really that Bitcoin is being put to the test to see how it fares under those economic conditions. That's something to keep in mind. You can see over here minus 37% for June. One thing that we have to watch out for is September, because September is just a very bad month for stocks and for crypto. You can see here it's generally red. I've also shown you this before over the last months. We are in a midterm US election year, which means on average stock markets grind lower, and the bottom on average tends to be in September. So I do expect September to be a really bad month for crypto and for the stock markets. As you can see over here on the quarterly returns, because the quarter is also just closed, this was the worst quarter again on record since 2013 for Bitcoin's performance, minus 56.2%. And we have had both quarters being red over here. You can see Q3, it's a bit mixed results, tends to be red also, red and green, both mixed. But I do think we could be looking at another red quarter because of September potentially. Alright, so Bitcoin is currently trading under 20,000. It is 19,632. You can see the month actually closed at 19,924. So it actually did close above the all-time high of 2017 with the body, but that doesn't mean too much. Before I get into this month's analysis, let's go and look what I said last month on the 1st of June and how that prediction ended up playing out. To be able to get more bullish on crypto, I want to see Bitcoin close back above here with the monthly close above this 37. Until then, any bounces, whether we go, 32, 33, 36, 35, whatever it is, those could all be bear market rallies that still get sold off. Like on the monthly chart, it can just be a wick up and then pull back down and hit this 200 week moving average, or this 50 monthly moving average that is, the bottom over here, that has historically been the bottom. So I do still think there is a good chance we can see somewhere between 20 and 25K this month. So as you can see, that was once again pretty accurate. That is exactly what happened. We didn't get much of a rally. Any type of rally was a bear market rally, I said, and the target was here this 50 monthly average or the 200 week moving average. They're very similar, and that is exactly what happened. The low 20,000s, we actually went below that. We went to, you can see the low was 17,592, so it wicked below there a little bit. And that is exactly what happened. Predicted a month before, not because I have a magic crystal ball or anything. It's basically being able to read the charts, technical analysis, and understanding how chart patterns and candlesticks and momentum in these trends basically predict moving forward a high probability of what is going to happen. I don't get it right all the time, but if you understand what these charts are telling you, then you are able to make higher probability guesses on what the price action is going to do. And you can go and look back on all these videos that I make on the 1st of every month, a lot of the time, the targets that I estimate for it end up being pretty accurate. And once again, this is really because it's in your best interest to learn how to read these charts and to learn how technical analysis works, because it allows you to make better decisions for your investments, for your purchases, for your selling, entries, exit, take profits. All of that can be done much better when you understand how the charts work. So this month, what are we looking at? You can see that's obviously a big monthly candle. We know fundamentally things are really bad. Macro is really bad. The crypto space, all the lending platforms seem to be insolvent. There's a lot of protocols that seem to be insolvent. A lot of stuff is all being flushed out, and it just looks bad. So there's fundamentally, there's no real demand, no real good reason to get bullish at this point. And forgetting the fundamentals and looking purely at the chart, which is what we're doing in this video, you can see it just doesn't look good at all at this point either. So what we have actually had is we had a monthly close below this 50-month moving average, which hasn't happened. You can see here, all the way going back here since 2016. Here it bounced off it, here it wicked below it, but it closed above it. And now we've actually closed below it, which is a bearish sign, which means that technically as long as we're below this, the trend is still bearish and it could continue. So we are looking at minimum to start getting more bullish is to reclaim this with a monthly close above it, which means we need to get a monthly close above 21,500 before we can start to consider getting bullish. Until then, you know, there is downside potential. And how low can we go? Well, you can see I've shared this zone before. Basically, the tops of these candles over here, you can see the top of the wick. It is also a fair value gap. So the distance between the top of this candle and the bottom of this candle could be closed. So that means we could go somewhere between 14,000 and again 17,700 potentially. And if things get really, really crazy, we could see maybe $11,000 Bitcoin if things sell off in a crazy, crazy way. Again, there's no guarantees it is going to go that low. But based on everything that I've shared, the fundamentals and how the chart looks, as long as we're below this 50-month moving average, I'd expect still at least a wick into this zone, into the 14,000s. I think it is a possibility, maybe in the coming month, but maybe in the next 3 months or so. But I would say potentially this month even, we could see into the $14,000 level, and we are looking to get above, for the bullish case, 21,500 with a monthly close. It doesn't matter if it just wicks there and then pulls back intra-month. That would not be bullish, obviously. But if we can get a close back above that, things start to look interesting. Keep in mind that there are still a lot of people in trouble who are still leveraged up. There are still assets in the crypto space that are under leverage, that if the price does drop further, that leverage can get hit, those margin calls can get hit, those positions can get liquidated, which once again could result in a big red candle to the downside if that happens. Keep in mind, Celsius, apparently I don't know what their current position is at this point in time, but it is said that they have large, like hundreds of millions of positions in collateral that could be liquidated if we go into the $15,000, $14,000, $13,000 level for Bitcoin, and maybe that's going to end up happening. So the pain might not be over yet. Just real quick, we also had the quarterly and the 6-month close yesterday. So you can see the quarterly candle was a huge red candle. It's the biggest red candle in terms of a price down that we have had in the history of Bitcoin. And you can see that is obviously not bullish. Okay, so you can see this might just continue down, as you can see, into this level, somewhere between, I would say between 17 and on the very worst case, about 11K on the downside. And if we change it to the 6-month candle over here, very similar. You can see a huge red candle to the downside. That is not bullish. So let's see what happens. This is obviously a 6-month candle. So the next one will close on 31st of December at the end of this year. So on this chart, it is possible that we wick down, right, within those 6 months. Again, anywhere between, who knows, maybe 14,000 or 11,000, but then pull back up by the end of the year, because I do still expect Q4 to potentially be bullish. So if we get that wick down in Q3, say by the end of September, and then pull back up in October, November, December, and create that nice reversal candle in the 6-month, that is something that I'm looking out for. And then hopefully we get a bullish 2023 with at least some sort of relief rally, but maybe a much bigger rally than most people think. Okay, so Ethereum is currently trading at $1,047. Let's go and look at the recap of last month's prediction on June the 1st, and then I will share my thoughts on the current chart. So what we are seeing here, big bearish candle. I think we get continuation. this month. This is likely, unless we get a small little candle here, that's a possibility. But I do still think Ethereum is going somewhere between $1,400 and $800 before this bear market is finished. So you can see Ethereum was trading at $1,930 at the first of last month when I made that video, and I was saying there was likely going to be continuation, and we were targeting somewhere between $1,400 and $800. That is exactly what happened once again. So you can see that was a big red candle over here in June. The low of that month was actually $880. So that prediction was almost spot on once again. So what are we looking at now? Well, we have the monthly candle closed below the 50-month moving average, but unlike Bitcoin, Ethereum has done that before. Again, as long as we're under this 50 moving average, I think there's likely downside continuation. Given everything I've shared with you about Bitcoin and the fundamental state of the market, nothing is really positive at this point. So continuation is likely. Ethereum behaves more like an altcoin than it does like Bitcoin, so it tends to outperform on the upside, but also on the downside, meaning if Bitcoin sells off, Ethereum is likely to sell off even more percentage-wise. Of course, ETH is the currency that is used for a lot of these protocols, right? It's used a lot as collateral too. A lot of projects are built on Ethereum, so there is more liquidation risk for ETH that is locked in collateral in protocols and things like that, meaning that if we do get more sell-off, there could be a more violent sell-off in ETH than there is in Bitcoin. And again, I do actually think in a worst case scenario, we could see Ethereum going somewhere between $300 and $500, which is this level over here, this red box. Now look, we don't know if it's going to go that low. There's obviously a lot of different support levels. Once again, the low around $800, and then we potentially have this level over here about 670. But if the market does sell off, and like I said, I am expecting September to be a bad month, so maybe not in this month ahead, but in this quarter, I do think it's possible that we do end up seeing in the $300 to $500 range for Ethereum, which would very much line up with the previous 2018 bear market, where we saw over a 90% decline in the price of Ethereum. So again, while that may sound extreme, like the drop from 4,800 to in the $300 to $500 range, it is perfectly in line with what happened in the 2018 bear market. So even if that happens, it doesn't mean Ethereum is dead. It means it did the same as it did last time, and it might mean really one of the best buying opportunities that we still get, but obviously we'll assess that as it gets closer to the time and if it gets to those levels. So in terms of price, we want to really see Ethereum at least get above this 50 moving average, so above 1150 with a monthly close. But really, before getting bullish, we need to see this get back above this 2018 all-time high, so above 1440. We need to see Ethereum get there before we start getting bullish once again. Until then, there is downside pressure, and I would say that this month we could see anywhere between $800 and $300, depending on how bad things get in this month. That is completely a possibility. So before I wrap up this video, it is already getting a bit long. I covered Bitcoin, I covered Ethereum. I want to cover the S&P 500 because the stock market is correlated to what is happening with Bitcoin. So if the stock market goes lower, it's likely that Bitcoin and the rest of the crypto market are going lower too. What we have here is the S&P 500, and you can see we have the 50 moving average, which has been a kind of support for any pullbacks for a long time. It's basically the same as the 200-week moving average. I'll switch to the weekly chart in a second. But you can see, if we get close to this, here, it barely touched it, bounced off it. Here, it touched it, bounced off it. Here, it went through it, wicked below it, but closed back up and then continued higher. So at this point in time, that is around 3480 on the S&P 500, which means, we're at 3750, which means there's still quite a bit of downside, potentially likely this month. If I look at this candle, it's likely we touch it probably this month, which means, again, probably lower on Bitcoin and crypto this month. If you look at the quarterly chart on the S&P 500, you can see that was a big red quarter, and that does not look bullish at all. It is completely possible that we get continuation and that we actually get a drop into this level, potentially as low as 2580 on the downside this quarter. Remember, I said I think September could be a very bad month for stocks and for crypto. So maybe by the end of this quarter, we're going to get a really big sell-off in the stock markets that marks the bottom of this kind of bear market, and then in Q4 starts reversing and going back higher. that is still a theory and a possibility that I am looking out for. But I am pretty bearish this quarter on the stock market, especially September. Let's see how that ends up playing out over the next 3 months. And finally, just switching that over to a weekly chart, you can see the red is the 200 moving average, the blue is the 50 moving average. I actually made a video about this at the beginning of the year, about 4 or 5 months ago. I'll link to it up here in the description below, where I said if we break the 50 moving average, we go back down to the 200. Over and over and over, that happens on all sorts of charts, all sorts of time frames, whether it's stock markets, whether it's Forex, whether it's crypto. This is a very useful bear bull indicator where you can tell if we are in a bearish or a bullish trend, long term and short term, right? So if we are above both the 200 and the 50, we're in a strong bullish trend. If we get back below the 50, we're likely targeting the 200, but if we bounce off that 200, the bullish trend can still continue. If we get below the 200, then things turn into a longer term bearish trend. So you can see we were above the 50 over here. It continued strong bullish trend. We broke below the 50 and the target tends to be the 200. We are very close to it. As I said, that's around 3,500. It's almost the same as the 50-month moving average. So you can see what happened here. We broke below the 50, targeted the 200. Broke below the 50, targeted the 200. Broke below the 50, targeted the 200. And here we overshot it. This was March 2020 and it recovered. That was a good thing. When we got that recovery, that was a signal that the bullish trend was on to continue. So in my opinion, very likely we are going to at least touch the 200 moving average. But if we break below it, you know, we could see some sort of crazy crash like March 2020 in this quarter, especially September, I think, because also based on the midterm elections, September, on average, is the bottom month for midterm election years for the stock market. And then we see a rally in Q4. So it's going to be interesting to see if that is going to play out again. I do think the possibility is there for that to play out, which means if the stock market sell off this quarter and in September, it's likely that Bitcoin and crypto are going to follow. So be prepared for that. And of course, we will know, you know, by the end of this month, we'll do an update on the first of every month, but also in 3 months from now, we will be able to see how this quarter actually ended up performing. If you enjoyed this content, please smash the like button. It takes you 2 seconds. Click that thumbs up because it does help the video get out to more people. Subscribe to the channel if you haven't done so already. Get on my email list. First link in the description down below so I can send you updates whenever I upload a new video, when there's something important happening in the markets that you need to know about. Never overextend, manage your risk, patience is key. The markets are a way of transferring wealth from the impatient to the patient. Thanks for watching and I will see you in the next video.